What is going on, guys? Welcome back. It is Institutional here, and today we're going to be covering what the title says, right? Structure in Forex, but part two. And basically, what we're going to be looking at today is just when you guys are looking at structure. I know majority of us, or for example, what happened to me is price what we'd be doing is I would anticipate the right move, right? I would be looking at structure like this, and I anticipate this is my higher low and this is my higher high. But what would happen is we don't always get charts like this. It doesn't always just give us a clean retest that we see. Majority of the time, what it does is that it stops people out, and then it'll give you that correct bias. So that's another part about structure. You could have the correct bias when it comes to trading, but the problem is that you don't understand what liquidity is or what it means. So when liquidity comes to be, we need liquidity to get tapped into first, and once that does happen, then price could have enough fuel, or think about it like an injection in the market, so price can go to the next level of liquidity. So this video is going to be a little bit about liquidity and a little bit about applying liquidity with structure, but not about entries just yet, right? So we'll get to entries in the next videos, but this is just going to be the part two of understanding structure the smart money concept ways, right? So to begin with, when we are looking at structure, right? For example, like at a swing point, we understand that now we're not looking at structure as a internal structure. We're not really focused on that. We're just waiting for external structure. So external structure at point 1 and external structure at point 2, right? And we understand that here we have levels of liquidity and all these levels that we have yet to tap. Okay, we don't understand that, but just as an example, right? What we have to wait now for when we're looking at our external structures for liquidity to get grabbed. And then after that, in this area in small terms, you're going to have an entry model that we will go over. And then price will most likely at the end go back up to test your other external leg of structure. So gold now, it's setting up, it's making structure right here, right? It's making liquidity. What most likely will happen is that we'll drop back down to these levels, and then you will see price continue and make a new leg of structure to the upside, because overall we are in this leg of structure, right? So that might get a little bit confusing as of now, but let's go to cleaner examples so that I can show you guys what we're talking about: external structure, internal structure, and how we're waiting for that liquidity grab to happen, and then we would wait for that original trend. So you don't want to go in when price is just pushing like this. For example, gold, you can't go into these levels when price is rejecting these levels, but majority of the time what will happen is you'll get two taps like this, two taps, but when price starts becoming way too clean, like we did on Friday, I was looking for an entry, but what happened was that this is now becoming way too clean. So the retail trader is now aligning with the smart money trader. So what's going to happen is it's going to grab liquidity, and then once it grabs enough of it where the retail trader is no longer in it, then it will continue to its original trend. So you want to stay from charts that are too clean, like for example gold, and you can capitalize on it sometimes. You will get that pattern sometimes. So majority of the time what's going to happen is when your internal structure and external structure are aligning, what will happen majority of the time is you're going to have internal structural grabs, and then it would align with your external structure and you'll push in. So again, another little recap: here's your external structure, we have an internal structure grab right here, and internally we shifted in our small time frames down here from the external structure, and now we are pushing up higher, right? But we have to understand that again, our overall structure is bullish, and externally we're just waiting for a price to tap into again, because internal structure is now becoming too clean. So these are things that might confuse you a lot, and it might take a while to comprehend, but just give it time, video by video, and you guys will get better at what I'm teaching. So now let's look at for example EURUSD, right? Once again, when we're looking for our external structure, we understand that we have to look at our overall legs, right? So we have our overall leg here, we have our overall leg here, we have our overall leg here, and we have a leg here, and now we have a new leg right here. Yeah, so these are our legs of structure. External structure. Our internal structure is going to be where? It's going to be here, it's going to be here, and it's going to be here. We don't care about majority of the structure that's happening here. All we're waiting for is for internal shifts now to happen. So if we're in a downtrend, we're waiting for that to shift to an uptrend to now match with the internal structure. But now the important part is that we need liquidity to get grabbed first. That's the part that you guys need to understand, right? So what we need is always liquidity to get grabbed first. Whether it's a small liquidity grab like this, you can capitalize on that because liquidity is grabbed, and then you can take it to these highs and you can close right there. Or if it's a bigger grab like this, that it grabs everything internally, then you understand that once we get that shift there, price will most likely go back up to your overall external structure. Okay, so again, this might get a little bit confusing, but just take it a step at a time. Go over the video if you have to, rewatch it if you have to, but just understand that that's what's gonna happen. Majority of the time is we're gonna have to take internal structure to shift to external structure, and we're always gonna grab liquidity to have that gigantic push to the upside. So an example of this would be what happened last week, right? If we look at EURUSD, again, sorry about that, give me 1 second. Here is my leg of structure, right here and right here. And if we look at it, we came all the way back down to my 0.79% retracement leg, and then we pushed up higher, right? But we're not talking about fibs. That's the point. The point now is just to show you guys what I'm talking about with structure. So here internally, we broke out of this high, right? So now we shifted, and this becomes a higher low point that leads to this higher high, right? But what led to this high? This order block right here did, correct? So what you see is going to happen is we have structure being built here, right? Price comes back down, mitigates this, and once again pushes up. So you could have taken a take profit here, but let's say you didn't. Let's say you're waiting for these highs to get tapped into, or this order block, right? Here, once again, you can see how we broke out of internal structure. We're still not aligned with external structure, but we are shifting now with internal structure. So now in these levels, we're building liquidity, but we're starting to break internal structure. And you can see how we shift here, make a higher low point, and then push up. So it's not to say you can't capitalize, but you're waiting for that internal structure to grab the lows to now continue with its external structural shift. So what do you see happens next? These lows start becoming way too clean, which is what I'm telling you guys. You want to stay away from things that are looking way too clean, whether it's a trend line like this, and it's respecting these lows, you want to stay away from that. You want to wait for that to get grabbed, and then we can push up higher. Or whether it's a double bottom type of thing, right? Or triple bottom, whatever it is, you want to stay away from that. You want to wait for price to get the lows and then push up higher, because what's going to happen is majority of the time, yes, it could be breaking these levels like this, and you could potentially grab some take profit levels like this, like you could have with EU. You could have taken some profit here, you could have taken some profit here, right? Whatever, however your risk management and your model is. But you don't want to trade it that. You want to wait for the external to shift, for the internal to completely shift to grab that external structure. And then once it does that, you'll have an internal shift once again, and you can actually get that entire huge basis swing that you were waiting for, right? So now, once again, what do we see happens next with EU? We can see how all this structure is being built right here, right? So what price does is it grabs out of this liquidity, and look at what happens next. We grab this liquidity right here. We have an internal structural shift right here, and then what do? We make an order block right here, and from then on we start pushing higher. And once again, we grab liquidity here. We have an internal structure shift, and we push up higher. And once again, we grab liquidity right here, and from this last liquidity point grab, or this order block that we mitigated, price pushed all the way up. And that's how you're able to capitalize from these highs and understand that we have now shifted from our internal to external, right? You're waiting for that internal structural to set up, right? And then from there, you can capitalize and get that external structural type of shift. So it's understanding both of them and waiting for that internal to build the liquidity so it can get grabbed, and then you can capitalize it with the external structure. But it's not to say that even if you are looking for longs here and you have small pockets of liquidity like this, you are able to capitalize on them when price comes back up to these levels. So you could still trade and scalp the overall internal structure when it starts shifting, if it's correct with your external structure. But again, if you want to catch the overall structural leg, what you have to do now is wait for liquidity to get grabbed from both angles, get a solid break, liquidity run, and then you'll have that external structural shift, right? So now let's look at another example, which would be GU, right? So again, when you're looking at structure, look at your overall swings. And if we look at it here, here is a level which is way too clean, right? We can see how this level is way too clean. We grab structure, but look at how price is too clean. We have to understand that our overall leg of structure is this. And once again, if I show you this order block, this fib, we can see how I rejected out of the 0.79%. We'll get to fibs when we get to all of that in the future, but it's just showing you guys a little bit of nuggets here and there so you guys can start applying it to your trading. Now, what do we see happen? So what do we need to see? What we need to see is liquidity get grabbed from our internal structure, and we can see that that exact thing does happen. So we have the correct bias of GU that we are looking for longs at this time being because of this push up. But now what do we need to see? We need to see internal structural shifts, which we can see happen here. So we made a lower high point that led to a lower low, that we have a gigantic push to the upside. And this is also something that you want to focus on. Whenever you have pushes like this to the upside, right, that's going to tell you footprints in the market. This is where smart money is trading. So whenever price tends to come back down to these levels, you're able to capitalize. And now I'm going to tell you guys what levels are actually going to play out and what won't, because why this one didn't play out and why this one played out is simple. Here we grab liquidity, and here we have trendline liquidity. So obviously we need to grab that before price can start pushing up higher, right? And again, these might be a lot of things. I might get sidetracked in a couple of these videos, but it's just starting to apply everything one point at a time till we can connect all the dots together. So again, GU right here, we can see how we grabbed internal structure. We had an internal structural break of structure, and then we had a retest to this order block, and from then on we can take it to this internal structure, break out of these equal highs, and take profit right there, right? And now we're waiting for, now it's the same concept. See if we can grab again, because now we're building liquidity way too clean here. So we're waiting for this to break. I capitalized on some longs here on Thursday and took it to these highs, and that's what I'm telling you guys. You guys are able to capitalize from levels like this, and this was a 7-1 and the other trade was a 4-1, right? And I passed a FTMO 100k challenge with that. So it's understanding that you can capitalize on internal structural shifts, but what you're waiting for is, if we build liquidity on internal structure, then we're waiting for that to break to tap into our external structure to align with the overall trend, and then we can start aiming for the overall swing. All right, so I hope you guys got a little bit of nuggets from this video. It might have been all over the place, I'm not sure, guys. I'm just getting started, but there will be more of these, and there will be more educational videos every Thursday and Sunday. Yeah, guys, just take it step at a time. I promise you guys that the more videos that come, the more that it will all start making sense. But if you are a smart money concept trader, this might have made a little bit of sense to you, but now it's just understanding both structural points together. The next video will get more into liquidity and more into patterns and stuff like that, that we look for as smart money traders. But yeah, I'll see you guys in the next one. I hope you guys learned a little bit from this one. Institutional is out. Take care, guys.